the shits too.
Yo, we are live.
Big live.
Talk Money Tuesday.
Big live.
Welcome back, Levi. Welcome back.
Boom. You know who it is? It's your boy, the P. Opportunity plug. Left plug. It's going down. And we just got, look, the guest just popped in here with a suit on and shit. This man is official. This man must be about something. Because goddamn, I ain't never seen a man come through with a suit on the shits. This is the first right here. Oh, we can't hear you. You're on mute.
Yeah, you gotta fix your sound.
You gotta fix your shits before we start the introduction. Still can't hear you. You're fucking up.
Are you on mute? Is the sound, is the volume down?
It's all right. Don't get frustrated. We still got time.
Yo, so Talk Money Tuesday. The guest is figuring out his situation. I'm Brennan Boyd, my co-host Levi. Welcome back, bro.
What's popping? You know.
You've been gone for a couple of weeks.
For a couple. 3
weeks to be exact.
Man, the struggle is real. Your boy had the Rona. I don't know what variant. It might have been the Omicron, the Omarion. I don't know, but your boy was down for 3 weeks, sleeping on the floor. I almost died, high risk, everything. Now, I don't know about the whole vaccine shot shits with the extra boost and the 15 different kind of boosts, but I know for a fact that the virus is real because I had that shit and it definitely knocked your boy in your ass. So, you got to be careful out here. These people, some people feel like it ain't nothing. I definitely wasn't the flu because I've had the flu before multiple times and I know what that's about. And I have had multiple different type of sicknesses. That shit right there was on a different level. So of course I got tested and then it showed I was positive. I finally tested negative a week and a half ago. So, and I didn't even have a voice back then. You could barely hear me.
Can y'all hear me now?
We can hear you now. Goddamn. Boy, you sound educated.
My fault, man.
Look at that.
I was trying to use my laptop, but technical difficulties with the laptop, so I switched up on the phone. I'm on the phone now, so I'm gonna try to get situated here.
Yeah, set your shit up on your laptop.
Get situated. Levi hasn't been here in a couple weeks, so I'm gonna do a quick little summary, quick summary. But then I'm gonna let Levi lead. I'm gonna let you lead today, bro. You ain't been here. You gotta tap dance for the people.
We gotta do what we gotta do. Let's make it happen.
So Talk Money Tuesday. Every Tuesday we link up and we talk about money talk, wealth creation. We bring a guest on who is an expert or specialist in a specific category. And the whole point of the pod is to give practical steps. Yeah, we want to break things down. Yeah, we want to know how things happen. Yeah, we want to know what we can do. We want to know about the environment, what's working, what's not working. But we also want people that are listening and watching to leave with practical information and steps that they can do in the next 30, 60 days to put them in position to change their situation. So with that being said, shout out to one of our sponsors, Paperloaf. If you're in a situation you need to get your credit right, 2022, there should be no excuse that your credit should be under 700. You should at least be at 7 or striving to get to 7. And if you're in the low 7s or the mid 7s, we're going to the 8s, right? So if you need to repair your credit, fix your credit, correct your credit, or get some things off of your credit, make sure you tap into paperloaf.com. And Levi, welcome back. I'm gonna let you shout out the other sponsor and lead the charge today.
All right. Hey, hello everyone. As you know, I've been gone for a few weeks. TMT has been growing, and I'm glad to see it. It's your boy, the plug, Levi Lawrence III, the opportunity plug, and we're on TMT, baby. Talk Money Tuesdays, and today we have an amazing guest, stock market insider, next level information, next level capital, Damon Baptiste. And before we get into it, let me shout out to our other sponsor, the PMSM Group.
That's
Money
right.
Stream
That's right.
Team.
Tap in
Money
with
Stream
that.
Team, baby. That's what it's all about.
That's
Control
right.
your 24 hours, gain that sense of success, and make sure that your money is working for you. That's where we're going. And on Talk Money Tuesdays, every Tuesday, we giving a little extra gem. You know what I'm saying? We open up the chest. You know what I'm saying? The pirate's chest for you, so you can get all the treasures, all the treasures.
So Damon, before you introduce yourself and kind of jump in it, just want to set the stage. Now we had guests come on. We had some guests gave away trips to Vegas. Some of them gave away NFTs. Some of them gave away consultation. You know, so not that you need to go up above and beyond. Just setting the stage that our audience is used to getting some drip and some giveaways. So,
wow.
So feel free to offer up something to the people at some point during the episode. I know they would greatly appreciate it.
Would you be down to give away two 30-minute consultations?
Yeah, we can definitely talk about that, setting something like that up for sure.
Okay, let's see. You know what I'm saying? We about giving in here. We're about setting people up for success.
I appreciate that. So I guess I'll just introduce myself. My name is Damon Baptiste. I personally know Levi from the military. We met in the military back in, 2013. So it's been a hot minute. Just a little bit about me. I'm a business background. I have my bachelor's degree in business management, and I just fell in love with the entrepreneur. Although right now, to be honest, I'm not a full-time entrepreneur, but I know that pathway is only possible through one of the big things I'm here to talk about today, which is stock and investing, because that is not only a vehicle for you to really enjoy your retirement, but it's also a way for you to build your wealth and actually help change the trajectory of your children's wealth as well, especially if you start tapping in and start investing at a very early age. A lot of the times that, we don't know what we don't know. I didn't really know about investing until I took a personal finance class in college. I was my sophomore year. I was at UNC Wilmington, and I was talking about, it was like personal finance. We took a class. I didn't think much of it. Then this old white dude came in. Yeah, the old white dude came in and he talked about basically how he was a millionaire. How he was a millionaire, but you really couldn't tell from the way he dressed. He wore some, although it was like casual, but it was pretty clean stuff, like, some Brooks Brothers and stuff. He talked about how he maintained that wealth and how he grew that wealth was through investing. And so part of that class, which sparked my entire just change on how I viewed wealth and how you could attain it, was through stock investing. And so, yeah, that's kind of how it started. And I've been interested in the market, reading books about it, watching a lot of stuff on television, reading just anything I can grab and just continue to learn, because that's what it's about. It's a lifelong journey for investing and for growing for wealth.
Awesome. So I know people that are watching and listening, some of them are beginning, right? Some of them starting from scratch. They may not even have no investments. Some people may be novice investors. Some people may be more veterans and kind of, they understand the ebbs and flow of the market. So I would love it if you could break it down, from scratch. Like, what are some of the terms that people should familiarize themselves with? What actually is happening in the stock market for those that are unfamiliar with, these charts and the movements and things, these numbers and things like that. Right. And then we can kind of build out from there.
Okay. Well, I mean, the bare minimum, the bare basics of just understanding what the stock market is, it's a place where people are supply and demand on the highest level, essentially supply and demand of all these companies. So you have buyers and you have sellers. I think the most way that people think about the stock market, though, is long-term investing. So you're buying, holding in that aspect. So you're buying a piece of that company, a share of that company, and you're believing that ultimately that the price that you're buying at is worth it, and that on the long term that it's going to go up. As we all know in life and in the stock market, it's not always just up. Of course, there's times where it goes sideways, it goes down, and then eventually it goes up. But the real strength of your portfolio really can come from just having a handful of really strong companies. It's not about always buying what's the hottest news in the stock market right now. It's not always about what's going on maybe 2 months ago, because you have different times of the stocks where it changes. It's cyclical. And the things that most people that have attracted this into the stock market recently really here is over the last 18 months. It's over since the pandemic, when people saw how it crashed. Basically it dropped. It was one of the biggest drops since 2008, when I would think that was in March of 2020, when that really kind of stuff really kind of hit the fan, especially in April. There was a lot of panic in the market, and quickly it started to recover. And over the past 18 months, we've actually enjoyed the largest recovery we've seen in history. So what people were just literally just putting money in the market, and you were just seeing this. And so what I do want to warn people, or just kind of give them a heads up, is that's not typically how the stock market works. So that's not typically how it works. There are points and periods, yes, where you have extreme growth, but not to that level where people were seeing 200, 300, 400% gains in a matter of months, which is, it's crazy, but you made some good money this time of the year in the stock market. But now we're starting to see a reversal. And a big part of that reversal is just understanding the stock market. It does have a psychology. It does the masses, and to a certain extent of what they see going on. There's overall feeling for the market, and it does affect the market. So right now, as people can understand, inflation it is a big deal. It's at record points right now. I think it's around 6%. So that basically means that your dollar it's not going as far. So that whether it's buying at gas, whether it's buying bread, that we've all seen at the grocery store, our food and everything is going up right now. And that is affecting the stock market. That's creating fear right now. So because our dollar isn't going as far, that means usually people are going to be tighter with their money. And so, as I talked about in the beginning of the stock market, sellers and buyers, there's going to be a whole lot less buyers, because people are now holding on to that money. And so as a result, they're buying less shares, and that demand is not there. And so the supply overtakes the demand, and then you have a drop in the market. And so overall, that's kind of where I kind of see the market going for the next at least probably 6 months or so. I think it is heading for a correction, and it's I want to say it's needed, but with all that's going on with especially inflation, the Fed has a big talk tomorrow, kind of talking about what they intend to do, called tapering. That's like a big thing. If people are not aware about what tapering is, tapering basically means that the Fed are going to be increasing interest rates. So what people have been seeing probably for the past 2 years, 0% interest, 0% interest. So basically that means that when you were borrowing money, you're not paying that money any money back in return. So you're basically getting free money. And so now what you're going to start seeing is that the interest rates are going to start to go back up, and that banks are going to be way less willing to give you loans. And so there's going to be less money out there. Once again, supply and demand, just in the economy, same thing in the stock market. So there's going to be less money flowing, especially if there's less, a lot of the stimulus bill that was passed back when Trump was president, that money's starting to run out. And so that's why you're seeing that drop in the market as well. And so people also just need to be aware of that in general, and just knowing the overall economics in general, supply and demand, overall markets. That really kind of can help you dial in to being a better investor.
So what are some of the basics vocabulary words?
So a big one that people probably have heard is bull market. So
Yeah.
that's kind of what I would say we've experienced over the past 18 months, like I said, which is just steady growth, like really high growth, even though it wasn't a traditional bull market. A bull market really means is that the market on the whole is on the rise. The economy is doing well. There's low unemployment rates, low interest rates. There's low interest rates, but as we saw during the pandemic, there was high unemployment rates. So the market was still kind of acting as if ignoring some of that stuff, which was kind of unprecedented. And so that's how a lot of people made money. Another typical term people will hear is IPO. That was a big one. There's a lot of IPOs over the past 18 months. So IPO is an initial public offering. So what that means is it's basically when a public company is going to go public by offering their shares of their private corporation that they're now taking public. But in order to become a public company and to have an IPO, you do have requirements that you have to meet by the certain exchanges, and the big one is the SEC that people have heard of, and the SEC is the Securities Exchange Commission, and they basically are the ones that are in charge of kind of the stock market and holding those companies accountable.
Levi, what you doing? Are you cracking your neck because of the bull market or what?
Man,
I'm sure another term. Let me think of some other terms. Another term, calls and puts.
Yeah.
So that's another big one, but I would not recommend that to beginners at all. Even though I've been doing stock market stuff for over a decade, I really haven't played with options too much, just here and there, just because they are very volatile and you can lose a lot of money really fast, and you can also make a lot of money really fast. But the overall definition of a call, so a call is basically when you are thinking that you're buying 100, so you buy a contract. Let me reel it back. So a call basically means that you're buying 100 shares of a company. So for instance, we'll just say that Apple is at $100 a share. And so you're buying one contract, means that you're buying 100, you want to buy one contract of Apple. So that means you're buying 100 contracts or 100 shares at $100. So that's just one contract that you're buying, but you're paying at a discounted rate. You're only paying for that one share ahead of time, believing that it's going to go up. And you have to do it as what's called a strike price. So this is very more complicated stuff. That's why I wouldn't go too deep into the option stuff, because it's really not beginner level stuff. But basically, it just means that you're believing that you're going to buy a contract, you're going to buy one share, 100 shares of that company, and then sell it, and then it's going to go up. And so you're going to sell that contract back and make more money on the increase.
Bet.
So
all right, hold on. Let me stop you, dog. Let me stop you.
Right.
You starting to speak Japanese, and I know some of these people are like, "What the fuck is going on here?" So
Sorry.
I'm gonna reel you back.
Sorry.
You're good.
I won't go too deep into options. So we'll just kind of leave options alone.
Let's do this.
It's very.
Hold on,
it is more technical, and it is hard.
Hold on, Bap. Hold on.
Right.
All right. Let's do it like this, because we have a few questions from people.
Okay.
And they really want those answered. One of the biggest questions that I got when we posted this on Instagram, and we let everybody know that we were talking about the stock market, is why are stock market experts and professionals and people that study the market, why are they pushing people away from Robinhood?
Okay, so for me, I've actually had a bad experience with Robinhood. Robinhood, in my opinion, they have set people up for for some bad stuff. They do some shady stuff. So they actually just lost a really bad SEC lawsuit. So I talked about the SEC, the ones that hold those companies accountable. They lost a giant lawsuit where they have to pay over $72 million. So this came when the whole craze of AMC and GameStop, if people remember when that things went crazy. So basically, a lot of people knew about this on the internet during the whole Reddit thing before it took off. And so basically a lot of the quote unquote the little guy made a lot of money. And so guys were starting to cash out of those positions and make a lot of money. And what they did was they stopped and halted trading. Mm-hmm. So a lot of people, I actually know a guy that was a guy that I won't say his name or whatever, but basically he knew about it in the Reddit thing. He got into it, and basically he made over $50,000, right? And because they halted trading, he didn't allow him to pull his money out. He wanted to sell all of his shares so he can get out of his position, and they didn't allow him to. So it took 2 more days, and he lost money. He did end up cashing out, I think, with $28,000. But to know you had $50,000 and to take that haircut to $28,000 at no account to yourself, and it was just because of the company did some shady stuff, was that in itself, that story alone was, I don't mess with them. I don't recommend them. If you are going to use a broker, one that I use a lot and recommend is Webull. That's like one that you can use on your account, on like your mobile phone. Another good brokerage account that's really good is TD Ameritrade. That's another really good one. Charles Schwab also has a trading system as well that's actually pretty good. And those are some well-known brokers that I know that I trust and that would use, especially the Webull one that's actually mobile. I use that one probably the most. But for like my long-term.
Oh, we lost you. We lost the
volume.
Lost your volume.
The volume's gone.
Well, while he's working on his volume, so pretty much what he's saying, what I got from that is Robinhood took away the freedom, the free will of investing, of making those options available to you. And that's crazy. And that, funny thing is that same thing happened to me. It was way before the AMC thing happened. It was actually in, I want to say 2020, where I was cashing out of Robinhood because I believe it was Damon that told me, like, yo, get away from Robinhood. It's just not the move. So I was like, all right, I'm cashing out. I cashed out of everything and they wouldn't give me my money. And it took a long time for me to get my money. Didn't they hold your money for a minute, Brendan?
Yeah. They helped my bread. It took me like almost like 8 days to get my bread up.
That's crazy. And so it's from there. Once Damon told me, he was like, yo, stop messing with Robinhood. You got to start messing with these different type of apps. And going through there, I was like, okay. And I've never had that problem ever again. So when they got sued, I was like, makes a whole bunch of sense. You can't take away free will. You can't take away freedoms and hold people's investments hostage.
Yeah, the crazy part is that what I found out was through the news and some other articles that revealed that basically the CEO had some relationship with a big hedge fund manager, because the CEO is a former hedge fund guy himself, but he was quote unquote for the people. It's why he called it Robinhood, but he still had a relationship with a hedge fund that was in the opposite. They were in basically a put saying that GameStop was going to go down and they were supposed to make money as the stock went down. Instead, it shot up. And so that was costing them billions of dollars. And so they had to, step in somehow. And so, they basically didn't even admit to any wrongdoing. That was the settlement was just, something happened, but they didn't admit to any wrongdoing per se. But we kind of know what happened.
Yo, so my question is for people that, they're receiving this information. They're like, man, I might have heard this, for the second or third time on Robinhood, or maybe I'm hearing it for the first time. If they have investments in Robinhood, and we're saying, hey, that's definitely an app that you may want to, stray from. Is it a good idea for them to pull their money out because they can't buy the same stock at the same price that they bought it in the past?
Right.
So they kind of have to let it sit in there.
Yeah, and that can be a tricky situation, especially if you're up a lot of percentage in some particular stock and all your stuff is now in Robinhood and you don't want to sell at a lot. It's always good to take profit sometimes, but if you're doing something long term, I don't recommend you cashing out. So that can be a tough one, but you can roll it over. I'm pretty sure there are options where you can roll it over. I can't give you a direct answer, but I know there is an option where you can roll it over into another brokerage account where you're not losing that basically your prices at that point.
So that's good. So that's good for them to know, because I know that's definitely like a strike question. Like, I'm in this position at this price. I don't want to be,
right.
limited.
And you know what? I'll look more into that.
How do I get my money out?
Yeah, I'll look more into that, and I'll shoot you guys an email just so you can let your listeners know, let your viewers know that, hey, I got word. This is what you can do, especially with Robinhood in particular. It may be different for different brokerage, but I'll start looking into how we can how they can do that so they don't lose their positions.
Okay. So for right now, you're saying that a beginner, somebody that's never, maybe they don't even have any Robinhood. Maybe they do have a Robinhood, but they just got the little free shares that hopped in.
Right.
They're the best way they can start getting into checking out the stock market and investing is by first downloading apps like Webull.
Mm-hmm.
Now you said that's your top choice, right? So
Right.
I'm gonna say one because you said them earlier, but I'm gonna say one just to keep it simple for people. So Webull is the best one. Why would you say Webull is the best app? And can you spell that out? Can you spell
Yeah,
Webull
so
out?
it's Webull.
Okay.
I believe that's. Let me take. Don't want to tell you wrong, but yeah, I'm pretty sure that's how it's spelled.
Yeah, WEB
And
for sure.
yeah, and then you got TD Ameritrade is another great one.
Mm-hmm.
They have a really great brokerage service. E-Trade is another one.
Mm-hmm.
And then you have Charles Schwab. That's another great brokerage as well.
So why would you say these are great apps and brokerages to use?
One, they can be trusted with your money, so that's a big one with your security. We guys talked about the issues we had and some other people that experienced some pain points when people they're holding your money hostage essentially. And then another one is does have fees. So a lot of these places don't have fees when it comes to when you're executing a trade, because believe it or not, back in the day, every time you wanted to execute a trade, you had to pay a fee, and that fee was so you could pay that stockbroker that was literally downtown in either New York or Chicago on the stock market making a trade for that company. And so a lot of times now, to make it easier for the average day person to do it and to get into it, it's free for a lot of these, but not for all. Sorry.
What about ETFs? Let's talk about ETFs.
ETFs, that is honestly what I would recommend for most beginners, because it's really hands off. And the great thing about ETFs,
what is an ETF? What's
so
that?
ETF stands for an electronically traded fund, right? And it's very similar to like mutual funds. So an ETF is basically like a basket of companies that you're buying partial shares of. So you have, say for instance, there are certain ETFs that have like Tesla and Google and Microsoft, really, really high-end great companies, but a lot of times they are super expensive. Like for Amazon in particular, it's like over $3,000 just for one share. So it's a great way for you to own a partial share of Amazon at a fraction of the price. So that's why I really recommend ETFs, especially for beginners. It gives you a well-rounded exposure to certain stocks when you're in the ETF, which I highly recommend.
How would somebody get into that and start to get into ETFs?
One that I would definitely recommend is VOO. That's a really good ETF. There's another one, I think it was VTI. I think that was more technology based ones. One that's not doing so great that got a lot of praise was ARK. So that was ARKK, and that was she was actually funded by a really well known hedge fund manager, Kathy Woods. So that was a pretty big one, but unfortunately, it just hasn't turned out so well. She had a lot of EVs, and right now EVs are kind of up and down, so it's kind of underperformed. But that's another good one to be on the lookout for, because I think in the next
EV?
Yeah, EV is a electric vehicle. So that's like the big one that a lot of people hear right now. EV stand for electric vehicles. So ARKK, although it's down right now, it's at a good price. I think it's like below $100 a share, versus like 6 months ago it was like $140 a share. ARK, it covers, like I said before, it's an ETF, so it covers a wide range of different companies like Tesla, I think Amazon, and some other ones as well. So I really like ETFs because it's basically like the new age mutual funds, which a lot of us are aware of, mutual funds, or if you have a 401k, that's a lot of times that's kind of what a lot of people have as their exposure to the stock market is their 401ks, which is basically usually just a well-rounded basket of different companies that they own partial shares of.
Right. So one of the things you have mentioned there that Levi and I talk about, and I think it's great for people to start looking into, is the fractional investing. So you mentioned it, right, how fractional investing is basically what an ETF is, but could we break that down in a little bit more detail what fractional investing is?
Right. So fractional investing, instead of owning like a whole share, so if you bought a share of Apple, you own one whole share. So if it goes up tomorrow from $2 to $3, you just made $1 profit. That's how it would work. But with a partial share, instead of owning a whole share, you own just a fraction of it. So just think of like a whole pie. Think of you just taking a slice out and you own part of that. So instead of paying the whole dollar for that Apple share, you're taking a fraction of it. Let's just say you take out 25 cents. So you pay a fraction of the price for that whole share. But when Apple does well, or that share does well, you get part of that profit as well. You're just not enjoying the full range of the profits, but you are enjoying part of the profits. And that's kind of what ETFs are. You're getting fractional shares, you're getting fractional basically parts of that company. And so when they do well, you do well in regards as well, but you're probably just not enjoying as much profit as the person who owns the full Amazon stock at over $3,000 a share.
So we got one question in from for the audience right now. And the question is, what were some of the failed EV projects?
Some of the failed EV projects?
Yeah.
Let me see. Well, I know there's been a big one that Apple is currently working on. I wouldn't say it's failed. It's just still in the works. Lucid was another big one that's starting to kind of recover, but they did have some issues in the very beginning. There was some issues as far as whether or not they could basically deliver their products when they were signing on these contracts. But as we can see now, Lucid finally has some of their trucks on the road. I think they're about to release some now. Most of them are direct to consumer, so you order them straight from the factory essentially. I think, let me see, another failed one.
Oh, what happened to what about Neo? Neo was bumping at one point.
Neo was bumping at one point. Another big one. Well, I would say Fisker. That was probably like earlier days where people remember Fisker. That was kind of like an EV thing, and it just had so many issues, and you could only take it to Fisker because no one else could work on the vehicle. It just really fizzled out and didn't work out at all. For the most part, there's been some other, I want to say, kind of failed experiments. I know Ford at one point tried something. GM, a lot of the major American companies had really tried to branch out early, but they just couldn't make them look good enough, essentially, or for the range. And so that's why Tesla's been really successful, and they're probably just have the largest ground when it comes to EVs, even though there's some other people trying to come in, like Apple's trying to come in. I've heard things that Amazon may be trying to dip their toe into the EV market as well in some way. And so other people are catching up. There's some high-end ones, like Porsche has a really, really nice EV that's like really like kind of groundbreaking, the Taycan. You've got some of the ones that are coming out also with Mercedes that's coming out, I think, early next year, of a really groundbreaking EV. So there's going to be some people coming up, but when it comes to sales and what people recognize with EVs, Tesla is still going to be kind of like the highest one when it comes to that.
So we got a question on one of my lives where I'm on both of my phones, the PMSM group. Somebody asked, what would be the preferred move? Should we focus on ETFs, or should we go try to do an S&P 500?
Okay, so well, the S&P 500 is basically like that's your Standard and Poor 500. So it's covering like basically the top 500 companies in America. So EVs are just going to be like your certain slice of that. So EVs long term, I do like EVs. It's kind of you can have one without the other. You can't really, you can invest in parts of the S&P 500. It really just depends on what kind of growth you're looking for. If you're looking for high growth, or you're looking for something that's going to be kind of steady and be kind of not as high growth, but it's going to be really steady growth throughout the years, versus one that's a little riskier. EVs are a little bit more riskier now, because at the end of the day, you still have oil companies are still king. At the end of the day, they are right now, because they're in power, and they have a lot of lobbyists that are still trying to do things that make sure that that the EVs have to wait some years before they can truly take over.
Did I say EVs? I meant to say ETFs.
You definitely said EVs, bro.
That's my bad.
You said EVs.
Yeah, I looked down and it was like ETFs. I was like, my bad.
But just because we're on the EVs, I want to just kind of add a little bit of spice to what
right.
D was saying. Just in terms of the oil companies, right, having the lobbyists in their pocket. So when you think about long-term investing and you look at like where we're going as a society, right now would be a great time for you to invest in some EVs, or invest in companies like Tesla, Solar City, some of these companies that actually have like a lot of this solar power, because that's where we headed, right? We're headed to green, even though they're trying to hold it and make it a slow crawl.
Oh yeah,
people are buying.
That's where they're going. That's where they're going, and that's where you can see why they're gaining so much momentum, so much power, and it's only for so long that they can kind of block them out. So that's why it is nice if you can identify some good EV companies. Tesla is, although people think of it as an EV company, it's much more than that. So, but Tesla is a good one when it comes to EVs, electric vehicles. I do think some of the American companies are really going to start to catch on when you have Ford. Ford has their electric truck coming out. And if people don't know, that Ford F-150 has been the best-selling vehicle in America for the past 5 years plus, basically. And it's and they're starting to make some headways. And so Ford is a good company that you can actually get right now it's below $20. So it's not expensive, but long term it's probably going to have a good one. But it's still not going to be at the growth of a Tesla, versus, although have you seen it's come down some over the next 5 to 10 years. How much do you think Tesla is going to be worth versus what Ford's going to be worth?
For sure.
So, question: do you think this? I don't want to call it a crash. Do you think this reset that's about to happen for the market is going to be similar to what happened when the pandemic happened? When the pandemic happened, everything dropped like crazy, and it was just like it was buy time. If you had some extra bread, it was time to buy right then and there.
Right.
Do you think that that the prices are going to drop anywhere close to when the pandemic happened?
I don't know if it will drop that rapidly, that quickly. What I do think what we're going to see is a kind of a slow decline, and maybe here or there you might have a big drop. But I don't think nothing as crazy as what we saw with the pandemic, just because that if the government didn't step in with the spending and some other stuff, it would have been a lot worse than what we saw. So that's why they're kind of easing in with it right now with the tapering. That's why the big Fed talk tomorrow, a lot of people should just pay attention, make sure you stay kind of your ear glued to the streets for that one. I'll definitely be talking about it in the PSM group and what we talk about in the chat. But it's definitely it's going to drop, and it's not going to be, I don't think it's going to be a bad thing. It's going to be a really good opportunity for people to really buy good companies at a lower rate. But I think overall, as long as you've got your money in a good spot and you've got it in companies that you truly believe in, you should be fine. The problem that most people have is that they buy these stocks, they have them for a while, they see the green, and then as soon as they start to see red, they can't handle it. And it's for long-term growth, you're going to have those days, you're going to have those times where you're seeing red for sometimes weeks at a time. And if you really think about it, like the people that have giant, really big portfolios, I'm talking $1 million portfolios, some days they're seeing 20, 30, 50, 100 grand gone in a day when they have a big drop. And you have to be able to stomach that and understand that over time, your money is going to compound and you're going to make way more, especially if you're invested in the right companies.
So I got a couple of questions, but Levi, if you have some, I'll let you lead off, and then
No,
I'll follow.
no, I was gonna say that I see some questions popping up in the comment section, but if that's what you're gonna say, go ahead, do your thing.
All right. So the first one I want to just address was from the comments was why is it important to get into stock investing?
Well, the importance is that right now, especially what we're seeing now, what people we're really going to see is inflation. So with the stock investing, if you're making the average stock, what they say, like basically from a 401k, you're getting a percentage of like 8 to 10% is a good year for return from your average S&P 500, and your NASDAQ maybe a little bit more, maybe 10 to 13%. Versus when your money is sitting in your savings account, it's making 0.00000. And so with inflation, you're actually losing money. So every time your dollar sits in your account every day, it is dying and it's losing money and it's hurting you. So over the long term, the only way that you really can make your dollar grow and actually come back with more is to put it into the stock market. But I mean, besides real estate, the stock market is one of the greatest vehicles of wealth when it comes to building your money, plain and simple.
All right, so another question we got. Well, first of all, thanks for that answer. I think that brought a lot of clarity. Second one I have is about fintech. So break down what fintech is and why is there a fintech craze right now?
So fintech is basically anything having to do with your finance basically meshing with technology. It's essentially what it is. So you have your buy here, pay here, your which is really big coming up right now, is buy now, pay later. So it's essentially like your credit cards for certain websites. But fintech is basically changing the way that businesses interact with their customers. So they're able to basically take this data from all your sales and everything, and then you're able to turn that data into ways to make the company more profitability, with whether it's better advertising, figure out who your target customers are, and it's allowing companies to be more your companies to be more nimble and agile. And so the companies that are helping those companies do that, which are quote unquote your fintech, those are the guys that they're making a lot of money. And they're seeing right now that if you don't have some type of social media presence, if you don't have some type of it's at this point, it's not everyone has that. So what's the best way to utilize that, though? A lot of people don't understand the metrics of the information that they're getting. And so the fintech companies are helping transform that data from their social media platforms, from their advertising campaigns, and they're using that in a functional way to help them grow.
So I want to give a little bit more clarity on that also for people that are watching. If you got an iPhone right now, or if you have an Android, and if you buy an app, right, or if you're paying something with your wallet, you're using fintech. That's financial technology. If you just put your finger on the little, well, there's no button right now on this iPhone, but back in the day when it was a button, you could just use it. That's financial technology. Or if you go and you do a tap with your phone, using financial technology.
Yep.
So these basically breaking down the companies are allowing that to actually take place. They're middlemaning between your account and the device. So that technology, that middleman technology, is a financial technology. And these are the type of companies that are actually trending upwards that we should be paying attention to in the market.
Right. And they're seeing that, like when you have, Amazon, some of these people buy up some of these fintech companies, is because they're trying to take that data and the knowledge that company has gathered and sometimes implement that or make it so it's some proprietary technology that no one else can use, and that they can kind of stranglehold the market. So fintech companies are going to be big. And so me definitely paying attention to those will be really important.
All right, so a couple other questions we got that popped up is livestock investing. So this is something that Levi talks about too in the group. I heard him mention this prior. So what about actual livestock investments?
So I don't know too much about the actual livestock investment. I will be completely honest, but I do know the only way I really follow them is because you can it's a way to see how the market is going and how the economy is going, I talked about. So if you can see that the prices of the stock shares of goats and chickens and cows and everything are going up, that's a signal to something like, okay, that should raise your eyebrows and say, okay, where's the trend? Why is this happening? If that's going up, that's affecting supply chains here. It's affecting food prices here. It's affecting production here. So that's how I look at it in that aspect. If I'll let Levi, I guess, talk a little bit more about the actual buying and selling of your livestock shares.
Let me tell you. Let me tell you. All right. So here's my thing, and this is to the question. Pay attention to the prices of food within the grocery stores. Okay. When you pay attention to the prices of the food within the grocery stores, meat, different kinds of meat, different types of vegetables,
Fruits,
all that stuff,
yep.
Fruits. The next thing you want to do is figure out what company is contracted out with that grocery store, and from there you will know, because some of those do have IPOs that are available. Those are the companies to just have a little bit of ownership of their company. That's something that I do when I see. I'm like, oh man, I was like, chicken breast is up, ain't it? Damn. I'm like, let me go see who they're contracted out with, and it's nothing but a little bit of search, right? And then you're like, okay, let me go ahead and buy a share of this or two. And depending on how you live your life, because I know people actually own land and stuff like that, buy some chickens, because chickens are cheap, cows are cheap, goats are cheap. A lot of people feel like that stuff cost a lot, but it really doesn't. Rabbits, quails, all that, bees, though, these are types of animals and insects that are incredibly valuable. And the prices on the products are going up, especially right now. So it depends on where you want to hold some type of control with your investment. If you just want to dabble in the company area, cool, dabble in the company area. But if you want some actual, I want to benefit from this, because if I have the actual natural product, then I'm the plug, because
Right.
these larger companies, they mix chemicals, they have pesticides, they have aluminum, all types of stuff within their products, because they spray everything. They have helicopters and planes that spray everything so that it lasts longer. But if you are somebody that maybe has an acre, and you can find an acre, maybe somewhere out on the outskirts of your where you live for a low price, and you decide, or maybe you have a house that you don't have to deal with the HOA, and you have some chickens, or you have a goat or something like that, you can charge twice, 3 times the price of what anybody else is actually charging for the milk, for the honey, for the actual meat, for any type of products that you can make from that. So those investments from livestock can be huge. And even when it comes to vegetables and fruit, especially when it comes to vegetables and fruit, because vegetables and fruit actually hold aluminum and pesticides way more than animals do. I'm done.
All right, so let me. So first of all, that's why when it comes to livestock, bro, it like
Yeah, man.
You know it, bro. You know what I'm saying?
There you go.
So to piggyback on that, a question that we had to come in the chat, and then also I wanted to know as well is all right, let's kind of relay the livestock into the livestock investing into like group economics. So for instance, let's say D, Levi, and myself, could we collectively come together and invest in some livestock?
Right.
And then have another party manage the farm for us, or manage the animals for us in terms of like the reselling of the good, of the products that are coming from these animals.
Yeah, there's a good example of that called Reits. So if you ever heard of Reits, that's another stock market term where basically you're getting, as an investor, you're getting to invest into basically a company that invests into real estate, that actually owns real estate, whether it's houses or apartments, hotels, commercial real estate. And you're investing into some of these companies that hold those commercial real estate or whatever real estate they do own, and you're getting to share in some of those profits. So basically, they're taking in your money as a shareholder, and then they're using that to buy those houses at real estate, or in your example, like you were saying, livestock, and you're getting to be a investor and get some of the profits off of that. And so a lot of those companies too, the REITs, are dividend paying companies. So a dividend stock is basically just like a normal stock, but instead of just not only owning a piece of that company, that company will give out a payment. It's either every quarter, sometimes it's monthly, sometimes it's yearly. It depends on the particular of that dividend stock, but that's what a dividend stock is, and that's how some people actually build another income stream, is by investing into dividend stocks. So they basically buy that that particular stock, and let's just say that stock, they pay you 70 cents, or they pay you $1 per quarter. So every quarter, excuse me, every quarter you're getting $1. So that basically there's 4 quarters in a year, so you're getting $4. So, but if you own thousands and thousands of shares, you can see how that will build up. And there are plenty of people today, wealthy people right now, that get hundreds of thousands of dollars off of dividend stocks, and they don't lift a finger. They don't do a thing. And that's what some people will die to make, working and trading their time for money. And, so that's another way to level up your game and level up your wealth, by investing through the stock market.
Man, that's actually pretty incredible. I'm happy that you actually you broke that down for people to consume, and that was actually great to hear too, because that's definitely something that I thought about as well, and directly just like related over to the livestock, which is incredible, because most people are just thinking about, okay, I'm investing in companies, I'm investing in crypto, I'm investing in stocks, I'm investing in real estate. But like, you can literally invest in farmlands, invest in other companies, invest in these REITs and things like that. So that's great. A couple other questions we got. So even though the SP 500 gives an average back of 5 to 7% annually, wouldn't crypto be better, since it's paying around 9% interest and above on certain apps? Which would be a better deal?
Right. So the problem with crypto right now is that it's very volatile. I'm not saying you can't. I would just recommend you do both, to be honest. But the thing with the S&P 500, it's essentially, it's backed by the government, in itself. Like, the government doesn't want to see the stock market crash. Whereas cryptocurrencies, depending on what coins you own, it can go from, a whole lot to nothing overnight, and sometimes within hours. There's been plenty of scams, so you have to be really careful when it comes to cryptocurrency. I'm still a proponent of cryptocurrency. I own cryptocurrency, but I do know that it's very volatile, and at any point in time, my portfolio can drop by 40% just as equally as it can double by 200%. Versus with my S&P 500, where I know it's backed by something, it's going to give me a certain percentage return, and I have several ways to use and execute that money. Versus with the cryptocurrency, there's only but certain ways I can use that.
So I think in general, people should. I mean, this is one of my favorite terms, is like horizontal diversification.
Great.
So I don't think you should be heavy in anything per se.
Right.
I mean, obviously, everyone's going to have their own individual investment strategies.
Of
But
course.
if you could leverage and have a little bit here, a little bit here, a little bit here, a little bit here, and obviously play in areas that you're way more familiar and play in areas that you're comfortable, but you still have a little bit of a presence in these other areas,
Right.
Especially in investments that might be a little bit sound, you'll be way more versed across the board.
Right.
You
Having a
can have
diverse
all
portfolio
that.
is really good. You just don't want to stretch yourself too thin in any area. And that's why you say diversifying, not only just in your portfolio, but like across different ones: real estate, land, gold, precious metals, just all of that. So you have to be able to invest and have that knowledge. And that's what you guys are here. And that's why I love your platform.
Yo, Levi. So I think I think we should have a special TMT, right? I just had this great idea. We should do a special TMT coming up, maybe for the holiday, right? Maybe we'll do an extra one week. We should talk about all the investment opportunities that are available in the
PMSM group.
Exactly right.
Yeah,
Exactly.
yeah.
And then not only break those down, right? Which I think this would be amazing. Break those down, but then allow people that are members and or investors in the group to come on and share a little bit of their experience as owners of certain investments. And then that way we could just bring people in and out in real time. I think that would be crazy.
Of course, I definitely will be down with that. I know we got some people in here. We have active and inactive PMSM members that are heavy on the real estate side, heavy on the crypto side, heavy on stock market, heavy on the mineral side. People buy diamonds every month. Some people buy pearls every month, gold, copper, silver. Animals. I know a guy who bought land and then bought goats for that land and is making killing. So you have so many different type of people out there that are interested in investing, and they just kind of just try different things, and whatever they kind of flow into is what they go with. But yeah, I'll definitely be down with that. And that's where all the asset diversification is. All that investment diversification is in the PMSM group. So if you haven't joined the Money Streams team yet, you are wrong.
So D, one of the other questions we have, let's talk about stock splitting, right? So what does it mean when a stock splits? And when a stock split, is that a great opportunity for an investor to pick up said stock?
Right. So usually when a stock splits, it usually means that the company is usually breaking off into two different segments. And so it's a way where a lot of times the share prices will drop. And so people do need to be aware of when that does happen. So usually with a share split does happen, the price does drop. But it's usually a really great time to invest into that company, because what that shows is that company is on a growth path, and that they have a really definite plan. That's why the stock split is a very dedicated and very strategic plan in order for companies to kind of split the company up into two different ways. It's usually for tax purposes on some other points as well, but for the company itself. And then it allows them for investors to get in at a lower price and then kind of build back up. So we saw that with Tesla. At one point they were well over $1,000, and then they split and they dropped well below $500 at one point. But now we see it's ran back up to $1,000 again, and it's dropped a little bit. Same thing we saw, I think, what was it with Apple? Apple did a stock split. It had a little bit of a drop, but then it's coming back up now. Apple's a really great stock to own as well long term, because they're in several different things. It's not just a technology company, computer company. They're even dipping into EVs, so that's one to watch out for. And it's just yeah, man, it's a great opportunity for investors to get in. I personally really pay attention when a company announces that they're going to be doing a stock option split.
So look, we've actually had D's time for over an hour. We've been giving you guys a lot of gems on stocks and stuff like that. And I was wondering if you guys would like to actually have some of his time on a one-on-one, because I believe he's going to be gracious enough to give away 2 slots of some consultations. And you know, as you already know, on TMT, we give a lot of value, but then we like to give bonuses. You know what I'm saying? So if you're interested in getting on a one-on-one with D and asking some more questions, or maybe just getting a little plan to help you out in 2022 in terms of stocks, or maybe you just want to work a little bit closer with him, definitely leave a comment in the chat. What I'm gonna do right now is, let me see if I can actually get the ticker ticking. Right there. There's a number right there.
Like the NFT shit.
It says NFT. I'm gonna hide it right now because this ain't a situation. I'm gonna make a little edit. So what you want to do is text over. Here we go. Stocks, right? Text over stocks, and not only will you get access to the vocab list, but you're gonna get access to get an opportunity to get some one-on-one time with D. So if that's something that you want to do, if you want to get a little plan together to get your stocks right, or if you have some questions that for some reason you didn't ask, text over stocks to 213-410-4920.
Yeah, and everyone has different investment strategies and different plans, and I'm here to help guide you on that investment journey and just let you know not only what I think about the market, but what different plans you can take, whether or not you have $1,000 to invest, $500 to invest, or $10,000 to invest. It doesn't matter. You know, we can figure it out.
Now, let me tell you this. This is a huge thing right now, a huge fucking thing, because I've personally gotten consultations from Bap himself. As a matter of fact, the majority of my stock market information comes from Damon. The majority of my stock market information comes from Damon. So for him to give out 2 free consultations is a really big deal. Even if you were never interested in the stock market, now's the time to take advantage of that. Because me personally, I'd be texting that motherfucker right now, because that's a big thing. One, ownership is everything. I always say own everything that you do. And when you purchase shares in a company, you are now an owner of that company. You have some kind of power. You may not have a lot, but you got a little. And a little is better than nothing. So having power in a company, because you start to get those text messages, those emails and updates in regards to that company is important. So now's the
shareholders meetings. They're important.
That's right, shareholders meetings. So make sure that this is the time to tap in, even if you think you have it all figured out, or maybe you know what I'm saying, you got your stock market portfolio nice and fresh. You never know what you don't know, right? And if you don't know, then you won't grow. So what you have to do is make sure that you text 213-410-4920, text stocks to this number. These are the people on my lives right now, on the PMSM group live, on the Opportunity Plug live, and the people that are on the Talk Money Tuesday podcast live right now. Make sure you text stocks, because you want, trust me, what I'm telling you, you want to have this consultation. This is something that even if you don't have a share to your name, that it's always good to have extra information, especially when it's fucking free.
So look, I want to challenge everybody right now going into 2022. And my challenge is this. Let's do some investing. Let's do some investing. And let's invest with the money that is not directly our income. Meaning this. Whatever money you're making right now, let's multiply that in 2 months, right? So if you're making 5, we're talking about 10 grand. We're making 2, we're talking about 4 grand. Whatever money you're making right now, put a plan together to double that money. Put that money to the side. So that might take you 2 months. It might take you 4 months. It may take you 6 months. Get some money that you're not going to be worried about. To go back to what D was saying earlier, when people have money invested, they get so emotionally connected to it because that's their money.
Right.
So if you have some money that's just for investing, that it almost doesn't matter what it does. Obviously, it matters what it does. We don't want you to disregard it. But you're not worried about putting food on your table because of this money. You're not worried about the money affecting your children or the money affecting your bottom line. Let's get a little bit of money together that you're not even worried about, but we're going to earmark it just for investing. Crypto, stocks, real estate, Reits, ETFs, livestock, whatever it's going to be. And let's make that impact happen in 2022. I want everybody on this live that's watching it in real time or watching it in the future to make that an intention for next year, because we all need to run it up. So make it a plan for you to do that. That's my challenge to everybody.
Yep.
Levi, you got any final words for D before we call it an episode or what?
Yeah, look, give everybody maybe about top 3, top 5 companies that they should invest in right now, even though we know that there's about to be a dip in the system.
Off the top of my head, top 3 companies that you should own for the next, talking about 5, maybe even 10 years, really. Apple is one for sure. Microsoft is another big one. Like they're what they're doing is going to be game changing, and Tesla. I do believe in Tesla in the long run because it's more than just EVs. And as long as Elon is at the helm, that company is going to be doing well over the next 5 to 10 years.
What about Facebook because of the metaverse? Well, Meta.
The metaverse thing, I do have faith in it, and we'll see what happens with it, and we'll see what Zucker likes to do, because I do think that changing his name is letting everyone know how serious the metaverse is. And if you haven't been paying attention to NFTs and to what the metaverse is, you better start educating yourself, because it's a game changer, and it's honestly going to be a way for wealth to exchange, and for people like me and you and everyone else to really grow their wealth and take it to the next level.
Man, well, we greatly appreciate you tapping on. I'm gonna let everybody know, if you want to have a one-on-one session with D, text the number below. Stocks at 213-410-4920. We're giving 2 people the opportunity to have a one-on-one consultation with D. So make sure, if you're interested in that, text that number 213-410-4920. I think that there's a couple numbers coming in right now, so we're gonna choose out of them. Where can they find you, bro? Where can they get a hold of you on social, website, or whatever?
Right. My main one for the company where I will be posting a lot of my stock stuff is going to be on Next Level Capital. That's Next Level Capital on IG, and that's going to be where I'm posting most of my stuff. I'm really going to start turning it up here for 2022. I'm kind of in prepare mode. I'm really trying to look at what the market is doing and how I can best kind of service people for 2022, and where they can get the most value and the most growth. And so I'm gonna be working on even a little ebook here too, to really help beginners kind of get started, how they can, start up their own accounts and start investing and start taking advantage of this.
So just to be sure, it's at Next Level Capital?
Yep.
Cool. Is it next.level.capital?
Yeah, next.level.capital. Sorry.
There we go. So next.level.capital. I'm gonna put it right here in the chat. You guys make sure you tap into to Damon at that handle. I just threw it in the chat. Next.level.capital. Make sure you following Levi, the opportunity plug. Make sure you tap into me. Make sure you follow this YouTube channel, because the playback's going to be available. And I drop so much valuable information on here. So you will definitely want to make sure that you tap in. Levi, bring us home, bro.
Yo. You know what today was? It was Talk Money Tuesday, baby, where you get all the dope gems, all the good shit. You get to talk to the shit talkers and the big steppers. Here on Talk Money Tuesday, we had Damon Baptiste, a stock market expert, giving those gems. Make sure you follow Next Level Capital. Shout out to Paper Loaf, one of our sponsors. If you want to get your credit right, I'm talking about from the 5 to 6s and the 6 to 7s and the 7s to 8s, you need to deal with Paper Loaf. All right? So make sure that you hop on Instagram and type in Paper Loaf. Make sure that you go to paperloaf.com and tap in. Get your credit right, because credit is definitely one of the kings. And shout out to another one of our sponsors, the big dog, PMSM Group. You know, I had to make a little noise for the PMSM Group, for the Money Streams team. If you are somebody that you're interested in controlling your 24 hours, you want that freedom to move around, to travel, and still make money, the Money Streams Group is for you. If you're interested in having your money make more money for you, the Money Streams Group is for you. And if you want a sense of success by following your passion and your path, the PMSM Group is for you. So make sure you go on Instagram and follow pmsm.group. Make sure that you go to moneystreamsgroup.com and get your membership today, because it's always the Money Streams way, baby. All right, this is Talk Money Tuesdays. We got Billionaire B, our main host. You got your co-host, the opportunity plug. And today was our guest, the man himself, Damon Baptiste. So make sure you get your free consultation. Text stocks to 213-410-4920. We're about to get these free ones. So don't miss out because he's about to click the button. Once
I'm
he's
about to run the wheel. I'm about to run the wheel right now. So
run the wheel.
The numbers I got, the names I got right now. We got Mark, we got Ren, we got Ari, we got Whitney. So we got 4 people bidding for 2 spots, 2 free consultation on stocks. I gave you a personal challenge next year. Have an investment account that's not tied to your personal income, and you're going to use this money to generate more money and understand more about investing, right? That's my personal challenge to everyone in 2022. So we're going to get into it. So let's run the first one.
Who is that? Marcia?
Yep. So Marcia, Mark, you got the first one-on-one.
Congrats, Marcia. Can't wait to work with you.
Marcia, come on down.
All right, cool. Hold on. Let me make an adjustment right now. Let me take this name out. So we got Whitney, Ren, and Ari left over to get access to this the last spot from D. So there's the spin.
Ari! Oh! Ari, come on down!
Yo, hold on. So look, let me just say something about Ari real quick.
She is a character, but she is a grinder.
I'm gonna say something about Ari real quick. And Ari, I hope you're still on and paying attention. So if you get signs from the universe, right? And what I mean by this is for the past, she's been on all of the TMTs.
All of them.
So for the past 6 TMTs, she's won pretty much every week, won something. You know what I'm saying? So what I want to just press upon is this. Take advantage of the information. Take advantage of these opportunities. Don't just, and I'm not saying she's doing this. This goes for everyone. When you have these opportunities, take advantage of them. Don't just not show up or show up and just listen, like execute and implement. Because someone like her who's getting like this free game every week, if she applied this, next year is going to be crazy for her.
Look, shout out to Marcia. I'm glad you got yours. I don't know you yet. Hopefully we get to know you in some way or some form. But we know Ari. Ari is about to be a fucking millionaire, multi-millionaire. Let me tell you something. Not only is Ari an Alluvione affiliate, making sure that her child is taken care of, she's in the PMSM group. She's a Money Streams member. So she's about her crypto. She's about her stock. She's about her real estate. She's about her diversification of her asset portfolio. She is on her way to truly creating wealth. And she's about to come out with a book. She's about to drop a book soon. We about to go live. Right. We about to go live on my shit. I know she's gonna go live with B2. She dropping some heat. Ari is on it. Ari, and Ty's on it. I see Ty. Ty is a Money Streams member. And I know she's affiliated with Alluvione. We got some people in here. Look, we got future multi-millionaires that are on Talk Money Tuesdays because they know that's where the fucking gems are. Okay? So I'm pumped. I get excited when I see this shit. I'm getting hot. What?
So, yo, guys, we want to thank you for tapping in to another episode. We got some amazing people coming on. And look, we're not going to miss a Tuesday. All right, we're not gonna miss a Tuesday. It's gonna be somebody every single Tuesday. Make sure you bring a friend. Tell a friend. Listen back to the playback. Show up with somebody next week. Show up with somebody the week after. You know what I'm saying? Because this is valuable information, and we're bringing it to you on this platform. So if you got a friend, if you got a spouse, if you got a companion, you got a little brother, you got an older brother, older sister, aunt, uncle, whatever the case may be, let them know this is where you want to be. To get this information and to get going, to get started, man. Let's go.
Yeah, I appreciate you guys for having me today. I really do. Really humbled by that. So appreciate y'all.
And quick question before we hop off here. Yeah. Damon, are we your first podcast?
That is correct.
Boom!
Podcast cherry popped.
We cherry popping around this motherfucker.
I'm stupid, man.
Yeah, man.
All right, y'all. So we'll see y'all next week. Thanks for tapping in. And congratulations to everyone who won consultation. Next week, we're back with more information, more giveaway, more gems, more heat, more energy. You already know what it is.
All right. Appreciate y'all. Thank you.
TMT, baby. Talk